Good morning. Welcome to E-mini Futures by Sell.com. This is Balasubramanian Iyer welcoming you on Sunday, 4th of June 2017. Retirement planning. This video I'm going to make a case why to manage your retirement, your wealth, to boost your 401k if you're in US or if you're in Canada, your RRSP, RESP, TFSA, how you can manage these assets and your wealth by using computer software, do it yourself software, and you don't and the advantage is you save millions of dollars or thousands of dollars in fees. The biggest problem today globally we are facing with the financial services industry, whether it is Wall Street, Bay Street, or any other street in the world, the financial services industry sucks our blood. They care about themselves first, and after they have been fully satisfied and their stomach is full, then they care about you, the investor. That's how the industry is designed. The second big problem with the financial services industry is they will always tell you to go long. They will never tell you to sell. They preach this philosophy of buy and hold because that is in their favor. They have an hidden agenda or a vested interest. So even the financial planners and the investment advisors are biased and ethically they are kind of unethical because they too have been brainwashed and they've been programmed to misguide you and tell you to always be long the market, and they will use the familiar phrase that time in the market is important, market timing is impossible. The truth of the matter is, today with the advent of computer software and sophisticated computer software, you can time the market in a very logical fashion, and you can perform better than all those people in the financial services industry make you believe. So that's what I'm going to explain. And just to drive my point home, Google's AI software beat the Go-Go champion easily. Deep Blue crushed Gary Kasparov. IBM's Watson thrashed the best Jeopardy player. So why am I saying all this? All these proves the point that computers are far superior to human beings. In fact, today's chess software like Ripka, Hydra, Komodo, Starfish, Houdini, they're so powerful. People like Gary Kasparov, Vishy Anand, and Magnus Carlsen will not even enter the room where these computers are there. They're so powerful, they'll crush all of them. Okay, human beings are no match for computers. That's the world we live in. So why not we exploit that? Okay, so the software that I'm offering is the one that I'm showing you. Let me give you a concrete example. Okay, so the software gives buy-sell signals, and for every asset class there are two ETFs. So if it gives a buy signal, you go long a particular ETF. If the software gives a sell signal in an asset class, you again go long another ETF. So you will short the market by always going long a particular ETF. So once you become a client, I'll educate you how you should do it. Now I'm going to talk about portfolio composition. I'm going to show you in this video how if portfolio composition or structuring your portfolio is key to success. So what I'm recommending is you should have crude oil in your portfolio. Next, you should have gold in your portfolio. Then TLT, that covers the investment grade bonds. Then HYG, these are the high yielding bonds. Then the EFA, these cover the financial stock markets outside North America. SPY is S&P 500, and QQQ, I added this because this is the technology stocks, and Nasdaq or tech stocks are really performing with turbocharged, and really all the FANG stocks and all that are exceptionally doing well. So if you invest your money in the portfolio composition that I'm showing you, all these ETFs, you don't need to chase individual stocks, and you can avoid the thousands of dollars of fees that you pay. Over a 20-25 year span, you will end up paying $500,000 to the financial services industry, to mutual funds, banks, financial planners and advisors, and all those fees are criminal, and there is no reason why you should be paying that, especially when you have a software. and that's my point. Okay, so let me give you a concrete example. Crude oil, the software gave a sell signal on 19th of April. Okay, now I can guarantee no financial planner or investment advisor in North America would have recommended to you to short oil, because they don't use computer software, and without software you cannot find these trades. And look what happened when you have to short oil. What you have to do is you have to go long an ETF called SCO. When you have to go long oil, you have to buy an ETF called UCO. So just let me show you. On 19th of April, SCO was here. So you had gone long here at 36.36, and look how much it went up, 45.3. So you can do the math and see, and less than a month, what is the percentage return? So almost $9 you captured by going long SEO, which means you're shorting oil. Now this kind of a trade and money making opportunities in your 401k or RRSP or TFSA is not possible, and the financial services industry will not tell you to do this. Banks, mutual funds, Edward Jones, all these people, it is not in their interest to make you aware of these opportunities. It's not that they don't know these things. Probably they do, probably they don't. My guess is they don't, because they too don't have this kind of software to identify selling opportunities. Most of the software they have is they're always looking to go long. They're designed to go long, so they have a long bias. But that does not mean in the market you don't get shorting opportunities. So you see, and now computer tells you everything when to go long. Like here it tells you go long oil, you go long oil, make money. You go short oil, you make money. Look at gold, for example. On 16th of May, computer said go long gold, and now you are already up 40 points in gold. So how do you go long gold? You buy GLD in your 401k, in your retirement nest egg, and you're making a lot of money going long gold. And see here, computer said on 24th of April go short gold, and gold had a majestic fall, $50-$60. How do you go short gold? You go long again GLL. Okay, it's simple. You use ETFs, and when you, by the way, when you become a client, I will also teach you how you can avoid some of these sideways signals. There's a very simple way to avoid them. I'll teach you all that. So the point I'm trying to make is, by using software you will juice up and enhance and boost your retirement funds and your returns, and that's the power that I want to highlight to you. Take for example EFA. How can you know, like for example on 20th of April software told you to go long EFA, so from 62 you are up 68. Most of you probably have never even heard of an asset class called EFA and what that is, right? And look how much your portfolio return is boosted, whereas with mutual funds and all that, you're not making this kind of return. And look at QQQ, you went long, boom, you go long here, boom. Okay, so this is what, friends, I'm recommending, and there is a way to avoid these small reversals which are not valid signals. I'll teach you how to do that. So that's the point I want to emphasize. The software is available to you. You pay only $100 per month. Do it yourself. You just have to look at it 5-10 minutes every day. You are going to save at least $500,000 in your lifetime by using a software like this. And it's very well constructed portfolio. You're covering bonds, you're covering commodities, you're covering stocks, you're covering everything. And you are going long the market and you are going short the market. You make money both ways. So tomorrow if the market crashes, S&P is overvalued and blah blah, whatever happens, it doesn't bother you. You are open to shorting the market too and making money both ways. This is important. I want to drive home this message. Millions of Americans and Canadians, they only go long. They don't make money on the short side. They have been brainwashed by the financial services industry to do that. Why it is like that? Because they want to make billions first, and only after their stomach is full they want you to eat the leftover breadcrumbs. That's how the financial services industry is designed. Okay, it is designed to make them rich, not you. If you become rich, at the end of the day, that is more an accident or a coincidence than an intended objective. Okay, that's how the industry is designed, and that's why these people take millions of dollars in fees and bonus and everything. Okay, so even if market goes down, they will still clip their fees. They keep. Look what happened in 2008 and 2009 during the financial crisis. Markets crashed like anything. S&P went from 1500 to 600. Did they ask you to short the market and make money? No. They asked you to stay long, and many people got wiped out and slaughtered, and they lost millions of dollars. This is the point. So I'm appealing to you again, open your eyes, open your third eye, do not be blind, use a software like this, manage your wealth, and you will be smiling and save hundreds of thousands of dollars which you are now paying to this industry. There is no rhyme or reason why you should be doing that. Okay? God bless you all. Bye for now.